Good evening, everyone. On behalf of Kirin Advisors, I welcome you all to the earnings conference call of Nisus Finance Services Co. Limited. We have full leadership team of Nisus Finance Services Co. Limited today with us. So let me just introduce. We have with us Mr. Abdul Sarawati, CIO India, Mr. Manish Meena, Director Strategy, Himanshu Shah, Head of AMC, Sunil Maheswari, Chief Financial Officer, Ruxana Khan, Compliance Head, and we have also the presence of Mr. Amit Goenka, Chairman and Managing Director, and Ms. Mridula Goenka, Executive Director. Now I hand over the call to Mr.
Amit,
Amit
you mean the
Goenka.
CIO Dubai? I think you.
Yeah, apologies. We have Mr. Amit Junjunwala, CIO Dubai Fund with us also. With that, I hand over the call to Mr. Amit Goenka for his opening remarks. Hand over to you, sir.
Thank you, Sakhi, very much for arranging this. A very warm good afternoon to everyone who have taken time to join us. It's a real pleasure to welcome you to our quarter one earnings call. Your company continues to move big strides forward, and it's always a pleasure to connect with you on these occasions, and delighted to share what has truly become a landmark quarter for us in the history of Nisus Finance, backed by our commitment to performance post our IPO. As you may have already seen, we have joined by our senior management, our heads of business on both sides, at the UAE front as well as on the India front, Mr. Abdul Sarwate and Himanshu Shah, our finance heads, compliance heads, as well as our business head in the UAE. So we're a full house today to present to you what we believe is a trajectory that is in the making and not a one-off phenomenon. While not only has Q1 of FY26 been our strongest start to any year, but it has already outperformed any other quarter or performance that Nisus Finance has charted so far. But we still believe this is just the first step and the beginning of a true growth story for ourselves. The story and the growth has been consistent across both at the top line, at the bottom line, at the operating level, at the strategic level, and at every tactical level. I think we are creating exceptional momentum with this. And the performance is obviously not just limited to numbers. It's about the depth of execution that we're able to create both in India and the UAE. In fact, I am in the UAE today in our offices in Dubai with our CIO and director for the UAE operations, Mr. Amit Junjunwala. And it's a testimony of the kind of endeavors that we're taking in both the markets across our business lines. The opportunity set has expanded, the quality of opportunities has grown, and we continue to pursue very curated ideas and opportunities and deals and investment strategies across both the geographies, which our teams are consistently delivering and pursuing 24/7. Our both twin engines in the geographies, which is advisory and fund management, continue to have shown robust growth. Very happy to see that the UAE business also has embarked on a very strong advisory business pipeline and executing very strong mandates and posting very strong earnings out of that on the back of a very strong, robust team that has got generated and established in the UAE, along with strong partners who assist us in these advisory businesses. So there's a very good balance that we continue to maintain between these two business lines. Our India operations obviously continue to focus on urban infra opportunities, including in existing metros as well as emerging metro locations, as well as the special situation space, which is very unique to us. Our UAE business has been scaling rapidly on the back of new investor commitments, as well as new bank sanctions and partnerships. And we are poised to continue to expand the investment thesis as well as the footprint in this financial year very, very rapidly. We're also having a very strong and robust pipeline of advisory mandates, which we continue to deliver quarter on quarter, which is helping several strategic investors, developers, and asset owners monetize their assets and find strategic alliances or look at channel partnerships. So assisting on a 360-degree program. This diversification of both business lines as well as geographies has been a powerful enabler for the company at large, driving stability and expansion with a continued growth trajectory in our favor. It has also improved our profitability clearly, with revenues revving up in this last 6 months from the UAE, which has obviously rationalized the tax incidents and made profitability margins far superior, as will be explained further in the financial slides. Quarter one was a period of decisive action. We've committed capital to new development opportunities within India from our fund, especially the one that is already announced, which is a redevelopment project in Mumbai and Pune. Very, very marquee projects with strong groups. Which is signaling a strong market positioning and ability to unlock high value potential. There are several others which shall be announced over a period of time, basis their confidentiality clauses. We've also taken a very strong step in pioneering the digitization of assets with a partnership with Toyo. Some of you may see in the podcast also that I did with George at Toyo in terms of tokenization of up to $500 million of real estate assets in the UAE, which is one of the strongest moving programs within the UAE, and we're one of the front leaders at that. So again, a nicest first advantage. You may also read within the balance sheet, which has been uploaded, that we have got approval from the board to also launch a SM REIT. So there are endeavors underway to also get licenses for an SM REIT. So in India. So our expansion of portfolios and product offerings in India, as well as advisory businesses in India, and similar endeavors of expansion in product offerings, portfolio, and advisory businesses in the UAE continue unabated. We have also announced some time back our acquisition of one of India's oldest construction company, the New Consolidated Construction Company Limited, where we've signed to acquire 69% of stake. We're in the advanced process of completing all the statutory formalities to make that company a part of the Nisus Finance Group and use our strategic capabilities to leverage on our relationships, our own financial acumen and track record to bring to life and growth this company's fortunes and multiply it multifold times, thereby creating a very strong synergies between the two entities. It gives us also deep execution capabilities that complement our investment expertise, especially as we deal with special situations in several projects which require deep execution capabilities, which this company is capable of providing at almost overnight. This adds in a very significant way to the urban infrastructure story that we have been propagating as being India's largest economic driver, where we provide capital, and a company like NCCL can provide its technical prowess to construct the world-class infrastructure in urban cities of India. Our partnership with B&W Developments has also been recently announced. We offered our first investment worth 150 million dirhams, close to about 350-400 crore rupees of asset to B&W Developments in partnership with Dr. Vivek Oberoi to monetize it for our investors in the UAE. And it adds a new dimension of partnerships as we look to grow our portfolio and monetize these assets by way of strategic alliances with very, very strong and capable counterparties in the UAE. The industry dynamics remain highly supportive of our ambitions. India's strong housing demand continues unabated. There is a growing urbanization in the country with new cities and a growing infrastructure footprint across roads, rail, ports, etc., which is adding to the urban footprint and therefore urbanization opportunities across the country, which is expanding our portfolio opportunities and investment capabilities. There's also greater regulatory clarity. There's a lot more capital which is coming our way as one of the most stable investment managers in the country, focused on urban infrastructure, and also the same for the UAE, where we are one of the foremost leaders when it comes to providing highly curated opportunities for investments. I think that, of course, is a great space to be in. There is huge tailwinds in our favor, both in India and the UAE. with both the countries and both the geographies revving up their engines in terms of urban infrastructure, in terms of expansion of capabilities, in terms of expansion of manufacturing prowess, and bringing global capital to its fold. And Nisus Finance is therefore at the forefront of both these geographies in helming these strategies and bringing global capital to accelerate these investment opportunities. So clearly, these tailwinds combined with our extraordinary technical and track record prowess, our differentiation positioning helps us create a very enviable blue ocean strategic place within our ecosystem. As we move forward in this financial year in FY26, we are super excited, we are supercharged and super confident about what lays ahead of us. Does not mean that we are not cautious. We are seeing the impact of the recent Trumponomics. We do believe that global shocks may tend to affect India and India's continuity and GDP growth rate, as well as household savings, as well as investment imperatives. We remain mindful of all of these global as well as other geopolitical issues at all times. Having said that, we still remain fairly insulated in terms of our defensive investment strategies and ideas. So we remain cautiously optimistic when it comes to India affordable housing and mid-income housing. We do believe there is tremendous potential to be captured, albeit it will be done cautiously and with the right counterparties. We continue to deepen our capabilities and our scale in our markets. We have consistently delivered superior return to our stakeholders, and we remain committed to delivering that as is true to our name, our vision, and our ethos. The foundations that we have built, the partnerships that we nurture, and the momentum that we've generated in this quarter, in the last year, and in the balance of this year gives me great confidence as I'm accompanied by my peers and colleagues and leadership that we are in our that we have set a very strong course to meet our vision and our goals, not just this year, but for the foreseeable future together. It is my pleasure to present to you our financials in greater detail as my team takes that forward. In summation, let me say the following. When we were posed with this question, what does Nisus Finance mean? And the answer is very clear. It stands for integrity, it stands for transparency, it stands for trust, it stands for governance, and it stands for creating alpha returns in curated ways in a very defined risk mitigated ecosystem. We remain committed to our ethos and our vision, and therefore our endeavor to present our Q1 results when it was not required as a voluntary action is entirely in line with our ability to present our facts, our numbers, and our story the way we know it, the way we understand it, the way we see it, and breathe it to everyone that matters and is interested in. So it is only with that we thought it is a great idea for us to bring forth and create a mechanism by which we can be completely connected with our stakeholders at all times. We shall keep this endeavor as a constant endeavor to the extent that it is possible, as we keep on disseminating information, as we keep on sharing our stories, our formation, and how we are transcending borders and transcending opportunities to create that unique alpha in our favor for all our stakeholders. With that, I hand it over to Sunil Maheshwari, our CFO, and Manish Meena to take you through the numbers.
Thank you, sir. Jay, please put the presentation on screen. Thank you everyone for joining this call. Just to recap in one word what Nisus is all about. I'm sure that a lot of you have already gone through the presentation, and we will save more time for Q&A. But for the clarity for everyone, Nisus for us is a urban infrastructure financing and asset management company. We operate in twin engines of fund and asset management and transition advisory services, both in India and in UAE markets. The Q1 financials has been the strongest ever performance in the history of Nisus, with a revenue of 28.72 crores, which is a 91% year-on-year increase, and PAT of INR 16.85 crores with a 103.4% year-on-year increase. The fund and asset management has contributed close to 38% in Q1, and transaction advisory has contributed 62% in revenue share in Q1 financials. Second slide. This is something we want to share with everyone. What differentiates Nisus? So this is Nisus' first advantage. Nisus is India's first listed AIF manager. As Amit sir has mentioned in his opening remark, we believe in a very highest standard of corporate governance, and with the public market access, we are fortunate to interact with all of you. Our India fund, which is RESO, Real Estate Special Opportunity Fund, is a dedicated special opportunity fund focusing on India's real estate sector. It is amongst the first funds to invest in complex projects, complex underwriting projects, and delivering superior returns to investors. Very similarly, the Gift City Fund is among the first licensed fund for overseas portfolio investment. The Dubai DIFC Fund is among the first India promoted fund to even secure leverage from global lenders. We are among the first AIF managers in the region to adopt the asset tokenization as well. So we are leading the charge for digital asset revolution as well, both in India as well as in UAE. That differentiates us with all our competitors in the market, and both in India as well as in UAE market. Q1 at a glance. In summary, as we talked about, it is our strongest quarter. The revenue compared to last quarter, which was at Q1 FY25, which was at 15 crores. This quarter, we have delivered 28.72 crore with an increase of 91%. It is driven by all growth engines, both in India and UAE, both across fund business as well as in transaction advisory business. So across all four cylinders, Nisus Finance is showing growth. In terms of overall PBT margins, compared to previous quarter at 11.67 crores, the PBT is at 20 crores with an increase of 71.5%. You would see an increase in depreciation cost. This is towards the fund setup and fundraising cost, which we have raised during the IPO, and it is being duly deployed to raise more capital and increase more product offerings to the investors. The PAT margin has improved to 16.85 crores with a PAT margin of 59%. The increase is largely driven by the operational contours as well as the income from UAE, which effectively reduces our overall tax rate also, thus boosting the PAT margins. This is the comparison of Q1 financials and FY25 numbers. In fact, we are almost at 50%. We are much ahead than the FY25 numbers as well. Moving on. Next slide. As Amit sir has rightly pointed out, Nisus is at a cusp of very strong tailwinds, not only from India, but across UAE and private capital markets. So in India, we are witnessing a surge in real estate sector, and the long-term vision for India's Viksit Bharat objective. India's real estate sector has to grow and has to contribute very significantly in the GDP growth. We believe with that strong tailwind, real estate investments are going to increase, and lot private capital pool will be moved towards India's real estate market. Similarly, UAE is showing no slowdown. In fact, in last quarter alone, they have did a transaction worth 154 billion, which reflects a growth of over quarter-on-quarter growth of over 20%. With that strong momentum in UAE market, we believe that momentum is going to sustain for some more time and makes it very attractive investment destination for the investors in UAE real estate market. Next slide. With those strong tailwinds, and that's the impact which we have seen in our Q1 performance as well. We have just provided a comparative analysis from H1 FY25, H2 FY25, full year FY25, and Q1 FY26. If you noticed, Q1 FY26, the revenue at 29 crore and a PAT of 17 crore, we have already surpassed the PAT numbers of full half year of H2 FY25, and that is actually driven by across all the four cylinders of transaction advisory and fund business for both in India and UAE. In fact, in Q1, the UAE actually contributed 58% in terms of revenue, and India business contributed 42% revenue. Strategic milestones for Q1. We have invested in an urban redevelopment project in India across Mumbai and Pune region. We have also signed a MOU with Toyo for tokenization up to 500 million in real estate. This is in Dubai. We have also announced acquisition of very prominent company NCCL. We will talk more about that, and we have secured capital of 110 crores towards acquisition financing for this company. Nisus Finance and B&W Developments also partnered for 150 million dirham for ready to occupy residential projects in JVC. This project enables the B&W team to market our properties in Dubai as well. With this, we have both the CIOs also. We can take more questions on the deal pipeline, which is very strong for both in India and UAE. In India, we are having a deal pipeline of over 1,000 plus crores across all the metro cities, and in UAE with
Yeah. Manish, if Avdut and Amit can present the deal pipeline and give a little color, I think that would be fantastic, So since we're talking about the India pipeline, I would invite Avdut to talk a little about the India trajectory and how he looks at the deal pipeline and the way forward for this financial year. Avdut, to you. Avdut, are we audible to you? You need to unmute yourself.
With you. Good evening, everyone. Thank you for taking out time to attend this call. So pipeline looks very interesting. I think at this point of time, given where the real estate sector is in India, and we seem to be multi-level cycle. The overall pipeline is very strong. We are looking at transactions across India, be it the major metros, Mumbai, Bangalore, Hyderabad, and NCR. So we have presence across all those cities to get the best transactions to us. We with multiple, we work with most of the developers. In fact, in the market, we have deep connects with many of the intermediaries who get us the best of trades. That's how we able to originate. And as Amit was mentioning some time back, curate the best transactions for the fund. I mean, these are effectively good trades with high IRR, but risk, because we have ability to get those transactions.
Some disturbance from Avdut's end. Is it clear to you guys?
Yes, sir. Your voice is clear.
Yeah, but I'm getting some disturbance. Yeah, Avdut.
I'm at a low network here, unfortunately. So I mean, just kind of put it short. Yeah, cross of terms, cross of.
Abdul sir, we can start. We can take a pause. We can start with Amit Junjunwala sir, and we can take Q&A at the later end for India deal pipelines.
Yeah, okay, because I think a lot of people are facing this problem. I'm seeing in the chat that
Yes,
they're not able to hear clearly Avdut, but I think net, just to summarize what Avdut, our CIO and Director for India Operations, was mentioning is that we have a very strong investment-worthy pipeline under execution. There are questions around that as well. When we talk about 1,000 crore of pipeline, these are all curated, approved, and capitalizable deals. These are transactions that the team is committed to consummate within this financial year, covering both performing credit and special situations. So that's really the target pipeline for closure for this financial year, at the very least, when it comes to the India team. I'll take a minute to also allow our UAE director and CIO Amit Junjunwala to also talk about the 669 million dirhams, which is roughly, I mean, many people tell me, why don't you talk in rupee terms, since we're talking rupees? So we're talking of almost about what, 1,500 crores or 1,700 crores.
Close to $200 million. Yeah. Hi, good evening, everyone.
Yeah, 1,600.
This is Amit Junjunwala, Dubai CIO for Nisus Finance. And as you can see in the presentation, so we have a very, very strong pipeline in the Dubai market. Currently, we are evaluating projects close to $200 million. And these are spread across all the communities which are upcoming and developing in Dubai. And as we all know, in Dubai market is on a bull run for almost 3 years now, and it continue to do so month on month basis, despite uh, 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 the summer peak season. There is no slowdown in the market, and the current pipeline which we have built is targeting, again, the same theory which we are following for our Dubai fund, is on the mid housing segment, where the average ticket sizes are, I would say, in the range of not more than $500,000 for an apartment. The idea is to acquire these assets at a great price, which in many of the cases it is below the replacement cost currently for these assets. And the target of this $200 million is to execute in the next 12 months. So this is what we are targeting, to build the AUM for this close to $200 million assets in the next 12 months. And in terms of the specific, I can say, yes, it is mix of residential as well as some of the warehousing opportunities which we are evaluating, because the warehousing space is something which really gives attractive returns to the investors. And on an overall, the deal pipeline of 200 million which we are talking is we are all on set for the next 12 months.
Thank you, Amit. I think that was great. I think we also mentioned some of the locations in which transactions are moving forward for closure. Moving on, Manish, to the next one that you'd like to talk about.
Sir, this is for you only. You can present.
Okay.
This is the same slide which we have discussed at the full year presentation. We maintained our growth outlook. And with very strong Q1 result, we are geared for FY26 outlook. And on future, Amit sir, if you can speak. Yeah.
No, I think generally, as a founder, as a chairman of the company, it is my job to vision what we can achieve collectively, and what is it that the market offers as an opportunity, and how to capitalize on that in the best possible way, keeping our value system, our ethos, and our vision in focus. With that, obviously, we believe that we are on a tectonic growth pattern. We see a very large paradigm in our favor, and we are fairly poised to make a very large impact in terms of not just our financial results, but also on the way we operate, invest, and create urban infrastructure opportunities for consumers, for public, and for investors and stakeholders worldwide. I think with that in place, I think we've got a lot of strategic engagements, which is obviously the core of our business. So what do we work out of? We work on understanding the regulatory framework of the regions in which we work, creating very deep-seated partnerships with the stakeholders here, whether the regulators, the banking space, the investment community, the asset owners, and other important stakeholders who make these things work for us. I think that's a very strong network that we managed to develop in UAE and the GCC region at large in a very short period of time, on the back of our CIO's ability to work these markets 24/7. I think that's a very important step forward, which makes us now rightly poised for a immense growth curve. So it's not about, can we buy 5 buildings and invest $200 million? No, it's about how do we create one of the largest ecosystems of pre-leased assets in the country, which can create a sustainable impact on the way mid-income affordable housing operates in the UAE region, because it's a market which was fragmented, did not have organized players who could own, manage, and rent buildings. Unlike in the US, unlike in many other mature markets, where renting is the core way of livability. So that is a market. The UAE is a similar market where almost about 89% of the people actually rent their spaces, they don't own it. So creating that institutional grade portfolio, and then on top of it being able to tokenize it, which means now making it available to global investors who have to put somewhere either from 1,000 dirhams to $1,000 who want to invest and actually own a piece of their action. So I think creating that huge ecosystem, creating that impact in the areas that we operate, I think really is the vision that we're moving forward with. And of course, it's a journey. I mean, this year's $100 million, $200 million, next year is double of that. I mean, so that's really the journey, but it's really capitalizing this entire opportunity because there is no one else really doing that. And I think that's the beauty of our business, is that we've created a very unique blue ocean for ourselves. We've cut out from the clutter of everybody trying to, for example, in the UAE, buy land, sell off plan, all of that, and create a very unique, profitable, defensive, but impactful ecosystem. Likewise, in India, when we're unlocking value, when we're helping redevelopment, we're helping, rescue, good assets from a bad loan scenario. Again, it's a very huge impact creating opportunity, which continues for quite some time. As you know, as loan books are getting cleaned up, assets are getting valued, customers are getting their homes. So I think creating an impact within our blue oceans, I think, is the larger progress, and being able to do that consistently, given the market size is very, very large. So really there are no constraints as far as what and how fast. It's only a function of time, and it's a function of how carefully we can go ahead and exploit these opportunities without being overly aggressive or foolish about it. So, a lot of questions will say, will you do 1 deal or 5 deals? I tell you, the market is very large, sir. We're looking at a $5 billion potential market for ourselves in the UAE. We're looking at an equivalent size market for ourselves in India. So whatever we do, I think there's a very large headroom for growth, and we have all today the capabilities. Post the IPO, we've built the infrastructure, we've got the licenses, we've got the offices, we've got the talent, we've got everything that we need to move this entire piece forward and capitalize on that large opportunity set which is available right in front of our eyes. Where there is really no noise. It's really up to us to see how much of that we want and how quickly. So I think that's a very important view that people need to keep in mind, and that we're recognized as a very strategic partner for most stakeholders in the region in which we operate. So therefore, we've got great strategic partnerships, we've got great networks, great intermediaries, great banking relationships, etc. And obviously, a fantastic team. I'm glad that we're all here on this call today. So I think that's really where it is, and we continue to be very careful.
Sir,
Yes.
Yeah, we also need to provide a brief update on NCCL opportunity as well. Yeah.
Please go ahead.
Yes. This is one of a very strategic investment done in announcement done recently, where we are acquiring a majority stake in a management-led buyout of new consolidated construction company limited to create a strategic platform to drive urban infrastructure growth. As we mentioned, Nisus is a fund which operates in urban, which believes in urban infrastructure story, and this acquisition marks a very strategic, one of its kind of acquisition, which has a very strategic value proposition for Nisus as well as NCCL. It's a company where Nisus is supporting the existing management, and the existing it's a management-led buyout. Nisus will acquire 69% stake in the company. The deal is expected, it's in final legs of closure. We will come back with more details once the deal is completely done. Moving on. Just to provide a very brief overview of the company brings a legacy of over 75 plus years. In fact, it is among the very few which you can count on your fingers. The kind of legacy this company has created in a grade A contracting space of building contracting space. It has delivered over 300 plus projects covering over 200 million square feet, and they boast the clientele of L&T, Lodha, Birla, Prestige, Phoenix, Runwal. They build the campuses for Google, Microsoft, HUL, Asian Paints. You name the marquee buildings, you will find the association of NCCL in those buildings. With a order book of 2,700 crores, which is roughly at 4 times of their revenue. Very strong presence across mid Maharashtra, Karnataka, Gujarat, and very big reputation both in India and UAE market as well. Moving on, with the opportunity is very simple. The way we see it, there are very strong sectoral tailwinds and market opportunities for this company. Considering the growth, what India real estate and infrastructure sector is throwing, and more people. And in fact, when you are seeing the growth of the developers, the most integral part for a developer is to have a very reliable contracting partner, and that's the opportunity set. In fact, it takes away a lot of risk mitigation for a financer also. When a developer is supported by a grade A contractor, it actually provides a very good comfort to a financer. We see a great synergy in that play itself. With our deep domain knowledge for financing over multi-crore deals in India and UAE, we do see a very strategic fit for Nisus, that we can bring a lot of value add for this company. Very active relationship with top developers and private equity backed projects, which is fully financial backed projects. And the only opportunity set would be again how fast the team can execute the projects on ground, and there is no dearth of demand as such. We do see a very high degree of unlocking of margin expansion, and command a very significant premium on this deal. If moving on, we have created a very simple Q&A which you can go through, refer to, and we are happy to address all your queries on this call. And in case if you have more queries, you can reach out to us by way of email on our IDs, and reach out to Kirin Advisors team. We will be happy to discuss more in greater details. Thank you. With this, we open this session for Q&A.
Okay. So, participants, the floor is now open for Q&A session. If you have any questions, kindly raise your hand. I'll allow you to unmute and you can ask questions. Also, dear participants, for a better democratization of this Q&A session, I'll request you to limit your number of questions to one. Mr. Neeraj, you can go ahead and ask your questions.
Team Nisus, this is a wonderful result, a very good surprise on the positive side. So my congratulations for that.
Thank you, sir,
Thank
and thanks for joining all our analysts call so far. So thanks again to seeing you again on this call.
Oh, that's very nice. I thought I will have to, kind of verbalize.
No, sir, we remember you also.
So now I just have one point to convey to the management. So the last call that we attended ended in a very optimistic remark by a member of the management, which put us in a totally different frame of assessment as to what the Q4 result is going to be. And I thought that was misleading. And me and a couple of friends who jointly studied your company. Yours is a very unique and a very, for a simple investor like me, it's a very unique company. It takes lots and lots of time to study and understand what you guys are doing. And I would say that I have not even, assimilated 10% of the work that you do. So we had a set of friends who got into trying to understand it, and we thought, yes, this is a wonderful opportunity. Uh, Let me tell you, there was a very, very strong sense of disappointment following Q4 results. And it was largely anchored to the very, very optimistic remark made by someone in the management team. It was, I cannot recollect. So, my request, you have delivered it now, and that is why I'm very happy. But it was very, very difficult, to understand why there was a distortion in what you said and what you delivered. I do not know whether you want to give an answer to this or not. I just want to convey this to the management. I'm still on the I'm still a very, very optimistic and investor who is walking along with the company. I wish well to the management and to the company, and obviously all those good wishes are indirectly for my own benefit. Please continue the good work, but just temper your optimism a bit with realism, so that we stay anchored to what is going to be delivered by you. Thank you very much.
Thank you, Mr. Neeraj, for your support, for your encouragement, and for your advice. It's very well taken, and we reconcile with what you've said. I think there's not even an iota of doubt with whatever you said is 100% correct, and we take that with all humility. The management is committed to do the best it can in the circumstances presented to it. However, there are things that one can't foresee. We know the business opportunity. We know how large the pie is in our favor. We know what we can deliver, but we do not. But we could not have imagined in December what President Trump will do in January, or what he's going to do last night. That was something which caught a lot of us by surprise, at least at the beginning of this calendar year, when the markets went into a tizzy. And there was a lot of bloodbath, if you remember, in the first few months of this calendar year. We're also investors, and therefore we're also subject to market idiosyncrasies, or we have to react to what the global sentiments are. Capital cannot be invested in times of extreme volatility and uncertainty. Our business is also squarely based on our AUM under management, and AUM is again a function of not just the opportunity set, but also the market conditions. There's nothing wrong with our investment. There's nothing wrong with the opportunity set, but there are greater sentiments to be thought of. There are greater market forces to be thought of. We've addressed it. We've addressed it in detail in our annual report. And in all our discussions. So whenever you see a newsletter, whenever you read about our Manish, can you tell me when is it that we are discussing or talking about this? Last year we've talked about this in some newsletter or some communication, right?
Sir, we have discussed about that in our last investor meeting scheduled in May, and subsequently we have also covered that in our annual report, and we will be talking more about in our AGM scheduled on 25th of August. So
And
we
Ruxan, the annual report uploaded already on the website?
Yes, sir. Yes.
So,
It is.
Mr. Neeraj, if you see the annual report, it actually talks about this. It talks about what is it that we intended to do, why it couldn't happen, and it's not like it's not going to happen. It's a function of time. So, what couldn't happen in January, February, obviously rolled over. I'll continue to do that. But very well taken. Thank you very much for your inputs, and again, thank you for keeping your faith. And your points are very well taken. While we remain dreamers and we remain committed, and all of us are super hard workers, but obviously it's better to be cautiously optimistic. We understand that. Um, can we have the next one, please?
Yeah. Mr. Ashish, you can go ahead and ask your questions.
Hello, am I audible?
Yes, Ashish ji.
Yeah, thank you. My first question is on the tokenization. So I just want to know in detail what is this and how this will help Nisus in future. Is it like we are getting the revenue in token form or what it is? And I have another question on the AUM. I think on last call, I think in May we identified these two projects, which is 1,000 crore in Dubai and then 1,000 crore same in India as well. And still there is no positive update. I think we only deployed 100 crore this quarter. So is there any timeline for deploying on those funds?
So Ashish, quickly answer both your questions. One is tokenization is like a REIT. If you understand what a real estate investment trust is, it is a regulated framework for offering fractional ownership in a basket of assets. The manager of the REIT earns an annuity. It could be anywhere between 0.5% to 2% of the NAV of the REIT. Similarly, tokenization is a similar program, which instead of offering a security like a share or units in a trust, one is able to offer tokens. So you take $100 million or $500 million of assets, you tokenize or digitize the assets, and you sell it to digital wallets. What the manager earns is effectively a percentage of that NAV or AUM. So when tokenization happens, Nisus Finance, as the manager of these tokens, will get a recurring fee income, which is a percentage of the NAV of the AUM. So that's as far as tokenization and finances go. So let's assume it's and
So
hypothetically
kind of
again,
REIT only. So it is kind of
it's
REIT
a yes,
where
it
we
is a
are
kind of
earning. Okay,
absolutely.
okay,
It is a kind of
okay.
REIT, but
And
not regulated by REIT is regulated by a central regulator like SEBI or DIFC. Tokenization is not a regulated instrument. It is on a digital framework. So like Dubai has created a digital framework, SEBI has created a digital framework in the sandbox. So it's a digital framework. It's not necessarily a regulated product, but it works very well, right? Like
great,
fractional
great,
ownership. Now, as far
great.
as
And
investments are concerned, investments have been happening. Whatever could be announced because there are certain requirements before things can be announced has been announced. It doesn't mean investments are not going on, they are going on. We will be announcing more of those deal closures and consummation because there are CPs, there are CS, there are certain moving parts, there are certain counterparties who need to also disclose it to some of their other stakeholders. So there are certain things that go on before certain transactions can be disclosed. They will be disclosed. It's not like those deals have not got funded. Many of them are getting funded. Having said that, kindly bear with us. The ratio of AMC to advisory remains maintained. The AUM grows, the advisory income grows, and therefore our pie is expanding.
any timeline means any update
And
for this quarter
we
means
will,
until
sir, we will
September.
tell you we have a very large pipeline, all is under closure. So it doesn't matter whether I've closed it in yesterday or tomorrow, all of these under closure. Every quarter, you'll see the impact of that.
Great, thank you. And one more
Thank
thing
you.
on follow up on tokenization. So, what we are expecting on the tokenization? Did we
So,
launch this
well, I
tokenization
think
or?
we're targeting, honestly, we're targeting this financial year for it to get launched. There are a number of steps to be taken. Right now, we've announced a partnership, which means we're investing into creating the digital framework. The company that we partnered already has a $10 million of seed capital. They are licensed. We're bringing together the assets. So, the number of steps we typically think it takes 6 to 9 months before things can go live. So therefore, we are giving ourselves this financial year to make this entire program live. Because
Great,
that's
thank
really
you.
where the because that's really where the whole the whole crux lies. Once it is live, then it scales automatically. Then you don't need to do anything.
Thank you and all the best.
Okay, thank you. Next one, please.
Mr. Nalin, you can go ahead and ask your questions.
Uh, Hello, sir. Thanks for a wonderful quarter. I have only one question. So this quarter, we saw that the transaction advisory business has rebounded quite sharply. So do you see any one-off in this quarter, or do you see this trend to continue for the rest of the year?
So, Nalin, you will see that the ratio has been shifting in favor of asset management, right? So, when what was 30% in AMC and 70% in advisory, we're seeing more and more of annuities and more of AMC income growing, right? So that's a great sign, right? Because which means the larger the annuities, the larger the AMC fees. That's exactly how the AUM can best be described. Having said that, there's always been a very large pipeline for the advisory side, first in India and now also in the UAE. We see very finite revenue, which is already part of our advisory mandates under closure over the next 2 quarters, which is why I'm very, very optimistic about this financial year for sure, and obviously going forward as well. So there is certainly no one-off. It is a very large pipeline which is under execution, multiple projects, multiple counterparties, multiple opportunities across the UAE is what we're working with our clients.
Oh, thank you.
Next one, please.
Mr. Saurabh, you can go ahead and ask your questions.
Sure. First of all, congratulations on a great set of numbers. I have, am I audible?
Yes,
Yes.
Saurabhji, thank
Okay.
you for
All right.
joining us.
Yeah. So I have two questions. First one is related to, so we have discussed in the past that our business is H2 heavy. And
Yes.
thankfully, we are, I'm very happy that now we are declaring quarterly results. I had actually asked this question in the last phone call, and I'm well.
Yes, you did. And we took note of that, and we are very happy that you're with us to witness it.
Yeah, I'm very happy, very pleasantly surprised. And so my question is related to H2 being heavy. Now we are declaring quarterly results. So if you can throw some light on what are the stronger quarters for us and what are the not so strong quarters for us. That will be great. And second question is related to the new acquisition, NCCL. So when can we expect the numbers, the consolidated numbers? Which quarter are we targeting?
See, I mean, where we are, I will answer the second, question, and of course, Manish can take the others. In terms of consolidation, we would have wanted it to happen as of September, but because we're going through the statutory processes of acquisition, there are a number of steps to be taken for the transfer of shares, etc., and in a control in our favor. It will take another maybe a fortnight for that to happen. So, which means we will be pretty much by end of we will be pretty much at the end of August. So we don't know whether H1 will be perfectly available for us to a consolidation. We are trying. We already put in our resources, we've put in finance teams, etc. But if it doesn't happen, then definitely I think by the Q3 it will be visible. We're hoping that'll be happening by Q2, but if not, then definitely by Q3 because we'll have effectively only 1 month to make that happen. So we don't know whether that's practical.
All right.
That's right. And in addition to that, as a management representation, as a management queries, we will talk more and more about in our H1 results as well on NCCL. We might not be able to do the consolidation at that moment, but we will be happy to discuss the updates on NCCL progress as well.
All right. And the quarterly numbers, if you can throw some light.
So as we discussed, we will be coming up with our H1 numbers. It's mandatory requirement. So during that call, which will happen somewhere in the month of late October or early November, at that time we will be discussing more in greater detail about NCCL team. We would love all your support. We'll bring more color to NCCL, who the company is, what the company is, what the management is, what the vision about that company opportunity set is. So we'll be sharing a lot more details during that time.
All right. I actually meant which quarter is gonna be the strongest, and
No, so you're right. I get that question, and you're right. The seasonality remains, So, for example, we're going through summer in the UAE, and we're going through monsoon in India, and typically at the end of August, September is when both these markets start to zoom, right? So, I don't have a doubt that H2 tends to be better unless there are larger events like what we saw in Q4 last year, which was very disruptive. So if there are no extraneous factors, then the seasonality pattern does not change, Saurabh. It will remain. So we do, and we are preparing also our capital, our resources, and our teams to ensure that we're able to service that demand in H2 that we're seeing erupting today. So if things remain in the same trajectory without any external interventions and disruptions, then definitely I think H2 will be continue to be stronger than H1 is our belief.
all right. Thank you. Thank you so much. You can't be more transparent than this. And
Thank you.
all the best for your upcoming event in Mumbai, the Alpha Ideas event.
Thank you. Thank you so much. Next one, please.
Mr. Deepak, you can go ahead and ask your questions.
Yeah, am I audible?
Yes, Deepak ji, welcome back.
Yeah, nice to meet you, sir, and many congratulations. First of all, pleasant surprise to show the quarter results. That shows the confidence of the management as well.
Thank you.
Corporate governance has been really high. I mean, you being an SME, setting a new bar for other SMEs as well. Wish you many, many congratulations and all the best for the future as well.
Thank you, sir.
Yeah, there's a few questions from my side, sir. I mean, it's a positive surprise that the PAT margins have increased because of our revenue coming from UAE now. What would be the baseline? Let's say, I mean, our PPT talks about PAT margins maintained to improve. Just wanted to understand at what baseline are we just trending it? I mean, the maintainable PAT margins would be the margins for Q1 or the margins for FY25 on the PAT side?
I think FY25 is an annual number and therefore is a reasonable reflection of multiple things. Having said that, because the revenue ratios have also tilted with the UAE operations coming fully on stream, therefore I would tend to say that I would err on the side of conservatism and say FY25 is a good baseline. But having said that, idea is to see if we can do better.
Sure, sir. Good. And sir, another follow-up is wanted to understand what do we actually mean by a deal pipeline? Is it like just a wish list where we will just deploy these funds or?
No, so deal pipeline for us is like the order book that you have in other manufacturing companies. These are things that you need to deliver on.
Yeah, but have we identified the, but does it
Yes,
mean, it's firm
yes,
and we've identified the
yes,
sites, the
yes.
discussions are happening as well, and
That's
some
the
bit of a closure is also
definition of deal
happening.
pipeline. That's a definition of deal pipeline. It's not a wish list. It's like I said, it's like an order book, something that you already locked in. You just need to deliver.
Got it. So it's more like a kind of
Unless
a, as
the
you
client
said, right,
cancels.
compliance thing. The deal
Now
might
there
have
will be
like,
some failure rate. There will be some failure rate because some client may cancel while it is not delivered, right? Or while it is not invested. Somebody may back out at the last minute. That may happen. It happens rarely, but it may happen. So for us, the definition of deal pipeline is equal to order book, which means it has to be delivered.
got it, sir. And one last question, sir, is on the advisory business. And this is one business, I mean, where, I mean, I feel the market is also a bit more concerned about as well because of the lumpiness that happened in the H2 part of the side of the story as well. I wanted to understand from you, sir, I mean, how do you see this business? I mean, shaping up. We'll know that, it's a 50-50 gonna be a split. More so, I mean, let's say by end of FY26. But now you have experience for Dubai market as well. Were we able to create a success story for advisory business in Dubai, and what would be the nature for this business going forward? Is gonna be a
So
lumpy?
that is what our CFO Sunil and our director strategy Manish explained is that a significant portion of our income in this year is being coming from the UAE because of which obviously the PAT margins are better. A very large portion of that, almost again 60% plus, is coming from advisory. And I mentioned some time back that we have a very strong advisory execution pipeline, which is already locked in for the next 2 quarters and already, looking at the Q4. So I don't see any challenge on the advisory front at all, because what we're able to offer, very few people do. The advantage is we come from a very regulated, very suave, very financially literate country like India, to a country which is still very peripheral when it comes to financial knowledge and understanding and ability to work structures. So our ability to translate that knowledge information, work with asset owners, look at non-performing assets, monetize it, help them, is very large. Our ability to create channel partnerships, distribution framework is very large. So just the sheer amount of work we have is very large.
Got it. So can I maybe indirectly infer said that Dubai as a niche market, maybe we are able to create our own niche, creating a success story for advisory
Yes,
business like we used to do for Indian
yes,
market, and it is becoming
yes,
a hit now.
yes,
Okay.
absolutely. Good
One
point.
last question, sir, if I may. While we all know your, targets and goals for FY26, we keep saying about $1 billion kind of an AUM by FY28 as well. So, any color around, on FY27 as well? What do
I
you?
don't know. Yeah. It's all crystal ball gazing, Deepak. I wish it can all happen as of yesterday, because the market is very large. It's a big ocean. Can we drink the ocean overnight? I don't know. I don't know. Idea is that yes, the size is very large. We're very uniquely positioned. We're a front leader. There's a NIFCO first advantage. All of it is there. You know, uh, we'd like to get to it as soon as possible, but at the same time, we don't want to be foolish about it. We don't
Makes
want to
sense,
make
sir.
mistakes. Yeah. So
Yeah,
we will do it gradually. We'll do it deftly. We will ensure that the foundation continues to be very strong. We're not trying to get very tall by shaking the foundations.
definitely, sir. Wish you all the very best, sir. Thanks for the questions and answers as well.
Thank you. Next one, please.
Mr. Shruti, you can go ahead and ask your questions.
Hello, am I audible?
Hi, Shruti. Good to see you again.
Hello, thank you. First of all, thank you for the detailed presentation and congratulations on the results. I would like to understand. So, for the India Fund, I was also going through the monitoring report. So, there is for this quarter there is unutilized amount for placement fees and distribution costs. So, can this be interpreted as a slower fundraising activity for this quarter, as per the monitoring report?
Yeah, I mean, we are just being conservative with cash, Shruti. I mean, if we can raise money on our own and not pay distributors, better, no?
Okay, so it's purely based on that. Nothing to
Yeah,
worry
I
about the
mean, it's very
fundraising.
easy to throw money and say, okay, let's pay all the money
Mm-hmm.
and then just pay for everything that is getting done. A lot of effort is going to do our own fundraising. A lot of it is done by ourselves. So it's not that our targets have reduced. It's just that we're being conservative about paying advisors. I mean, that money will go out eventually in the next few months, because that activity is nearly done. But we're being conservative about using cash.
Okay, so that will be used in the coming quarters for the same purpose only. It
Yes.
won't be reallocated to other objects.
Yes.
Okay. The another question is that, what operational or few benchmarks do you track quarterly to ensure that we are on the growth trajectory for 1 billion in FY28?
So what we track is the pipeline and the conversion ratio, right? Now the conversion ratio has to be 80 to 85% or higher. Therefore the quality of the pipeline is very important, both in the India and the UAE. Second, we talk about the credit quality and the potential for the advisory client. We stay away from clients who are either not credit worthy and are not able to pay our fees on time, because the problem in advisory can be receivables, because that receivables tend to come over a period of time. And so therefore credit quality of the advisory clients and ensuring that we get paid in time is very important, as well as the continuity of business with them, because mining advisory mandates every time is not necessary. So these are two. Third, of course, is a margin on cost. So we look at what is the cost and what is the margin, and therefore are we making a multiple on our cost. So there's a manpower cost and productivity cost, and therefore what multiples are we making, so that we're able to maintain our EBITDA margins or our operating margins. Those are the three important parameters. Manish, any others that you monitor and at your end?
Definitely, at internal, we monitor the KRAs of each team member also, Shruti. So as Amit sir has rightly pointed out, we are a bunch of very hardworking members. The full leadership team is there in front of you. And the goal is what Amit sir has set for us is quite large, and we are working towards it. It ensures a robust internal processes, internal monitoring across the matrices for each individual, aligning them with overall vision goal of the company, and that's what we track on a very regular basis. So very strong emphasis, and basis that commitment only we are right now today presenting our Q1 numbers. That shows our commitment towards the governance as well.
Okay, okay, I understood. I'll post the rest of my questions in the chat. Thank you.
Okay. Next one, please.
Mr. Janish, you can go ahead and ask your question.
Hello, can you hear me? Hello.
Yeah. How are you?
Sir, can you throw some light on pledging of shares for securing 110 crore loan?
Sorry, say that again.
Can you throw some light on pledging of shares for securing 110 crore loan?
Yes. What is it that you need to know? Yes, there has been a pledge to, I pledged my shareholding to secure this facility for a short period of time so that we can complete the acquisition of this, of the target company.
And like when we can expect like removal of pledge?
Well, the entire facility is what, 18 to 24 months, Manish? What is the term of the facility?
Entire
36
facility
months, I
is
guess.
36 month, door to door is 36 month, and with a very large payment upfront in next 2 quarters. So,
Right. So next 2 quarters, the debt will be halved and half the pledge will be released, and the balance pledge will be released over the next, I think, 3 or 4 quarters. So effectively, in about 6 quarters, I think we should be largely out of the pledge.
Okay, and like this 110 crore is like enough for like working of NCCL for next 2-3 years, or additional funding we have to secure?
I'm sorry.
110.
110,
110.
Janish, just to
No,
answer your question,
it is
a
much
significant,
larger.
yeah.
It's not 100% leverage. You know, there's a lot more capital we are putting in. I personally invested. The company's put in its capital. So the target company would be sitting on 80-90 crore rupees of new cash, and we would have bought out the majority stake from the existing owners.
Okay.
And
Yeah.
that cash is more than sufficient for them to unlock the value within the company. As we mentioned, Janish, this is a typical private equity backed transaction. We are looking at very significant untapped upside potential on this company. And right now, we will not be able to share more details, but just allow us one more quarter. We'll be coming up with great detail on NCCL's turnaround plan as well. The company is very, very uniquely positioned to benefit from the tailwinds what we are witnessing in the real estate sector. In fact, every big developer right now is struggling for getting very good contractor right now. As I mentioned, this is something which creates significant value for all the stakeholders. And that's the precise reason that this acquisition is being done on our own balance sheet strength. We see a tremendous value add for both Nisus as well as the largest investor network for us.
Yeah, sure, sir. And like historically, what kind of margin NCCL is working?
This
So, Ganesh, just to put quietness to this, as Manish mentioned, please hold this for a few days. Let us complete the acquisition. Let us come back to you with more data on this acquisition. I think suffices to say that it is a very large value creator for the company. We're employing money from a company which is generating a very high return on our capital, and unless it justifies that, we will not put the money, right? So, nor will I pledge my shares. So just wait to hear a little more about this once you have completely in control.
Sure, sir. Thank you.
Sir, I think we can take some questions from one last participant and we can conclude the session. Will that be all?
If hands up, I think from Sai Kumar and Ashish Jindal, maybe we can quickly.
Okay. Mr. Sai Kumar, you can go.
Yes, thank you, sir. Thank you very much. Congratulations on the great set of numbers on this Q1. I'm a retail investor. So just a question regarding receivables and debt. Will our business experience any trade receivables issues, sir? Does all the reported profit remain in our company as results? And what's the expected debt levels we can remain in our with our company?
So, Sai Kumar, no concern on receivables. That's, working capital is not needed, cash positive. Receivables are coming as scheduled and as per the contracted terms. So, no concern in terms of any receivable delinquencies at all. As far as debt is concerned, the only debt we have now will be the new debt we're taking of 110 crores, which will also get pared down to half in 6 months for the purpose of this acquisition. So, the net debt at the end of this financial year will be very, very small to none.
Great. So about the receivables also, sir, we will never experience such issues, right?
Sorry, what issues do we have in receivables, Mr. Sai Kumar?
Trade receivables like any other companies.
No, we have no problems. Ours is a natural cycle. As far as the AMC business is concerned, when we manage, let's say, 2,000 crores of investments and we generate, let's say, 40 crores of management fee, it is directly debited from the investment account, right? Which we control. So there is no concern in terms of receivables from our investment book is concerned. The only receivables that are outstanding remain on the advisory side. So it's a third party client, so it comes when we deliver the services, they need to pay us. That also is very, very clear. It's very contractual, which is why I said the credit quality of the counterparty in advisory becomes one of the key KPIs for us. We have no concern there as well because all of these receivables are locked in. They're all getting paid in time. They're all contracted, very strong counterparties. So we never had receivable delinquencies. We'll never have receivable delinquencies. So all receivables are coming as per their contracted timelines without any doubt.
Okay. Thank you very much, sir. All the very best.
Yeah. Thank you very much.
Sir, I think
yes,
we can conclude the meeting.
I think Ashish Jindal is left. If you can take the last question, his hand is
up. Yes, Mr. Ashish, you can go ahead.
Hi, sir. Am I audible?
Yes, please.
Hi, sir. I just wanted to congratulate you on great set of results. And I'm also quite excited about the construction company acquisition. I believe that the market is quite huge and you'll make the best out of it. I have some questions regarding the future vision about the company, but I think that you yourself will provide that once the acquisition is complete. So
That's right.
I just wanted to express my heartfelt congratulations to you.
Thank you, Ashish ji, for being in the call, waiting back, and we appreciate your support.
Thank you, sir.
Thank you. Thank you, guys.
Yeah, I think, sir, we can conclude the meeting.
Yes,
so
thank you.
Amit, sir. Thank you to the management of Nisus and all the other investors who took their valuable time to attend this. Further, if you have any more queries, feel free to reach out to us at research@kirinadvisors.com.
Thank you. Thank you, Kirin, for this. Bye.